Now, for more on the role of infrastructure investment in the U.S. election, let's bring in Chuck DeVore, Policy Vice President at the Texas Public Policy Foundation, joining us from Austin, and Todd Furniss, the CEO and Managing Partner at GlendonTodd Capital in Dallas. Welcome, gentlemen.
Thank you for having me.
Now, let's start by looking at both candidates' views on federal versus private investment when it comes to infrastructure. Chuck, we'll start with you. What's your view on where they stand?
Well, I think this is where the biggest difference is on their policy differences. Trump proposes to spend $1 trillion over 10 years. Hillary Clinton about $500 billion over 5 years. But the big difference is that Hillary Clinton wants to raise taxes to do it. Trump doesn't. And she wants to double down on what we currently do and includes as infrastructure parks and schools and things like that. Whereas what Donald Trump is proposing is incentivizing private investors through the tax code to get them to design and build and operate roads and bridges and tunnels and airports, and then subsidize that with federally guaranteed loans and, as I said, a revised tax code.
Now, Todd, let me bring you in here. As we were saying, Clinton and Trump both looking at taxes as ways of funding these infrastructure initiatives. But how realistic are their plans?
Well, I think, quite honestly, the reality of the situation is that nobody knows how big the problem it really is. I have a lot of regard for Chuck and the work he's done with TPPF. And I'm always a fan of anybody that went to Claremont. But at the same time, I think that it's really difficult to discern in any real way what the size of the problem is. And I think you have to include things like water and bridges and roads and airports, and you can't limit the discussion to just some one aspect of infrastructure. It's got to be the conversation has to be broader than that, because all these things relate not only to a safe and civil society, but quite honestly, again, back to commerce itself. And we have to look at infrastructure as the backbone of commerce.
And speaking of that, Chuck, I'll bring you in here. In terms of some of the examples of perhaps successful private investment models that we're seeing in other countries, are there some that really stand out as what could be a good model for the U.S. to follow?
Well, I think you're seeing that, for example, all throughout Europe and to a certain degree in America. Anytime you have a project that can generate a revenue stream, whether that's tolls on a road, whether that's money that you earn off of shipping water from one point to the other, whether it's a bridge, wherever you see that, you have increasingly resort to using private firms to design and finance these infrastructure projects. And frequently the challenge in America is that many Americans are used to thinking of their freeways as being free, when in fact they're taxways. They're not freeways, taxes pay for those. And the question, the fundamental difference between Donald Trump and Hillary Clinton's plan is that Donald Trump wants to incentivize the private sector to design, deliver these projects by changing the tax code to incentivize those investments, whereas Hillary Clinton wants to raise taxes to basically fund the same way we've been doing business for the last several decades.
Now, Todd, what do you make of that assessment?
Well, I think Chuck raises a good point, but the reality is, again, there's not going to be a single solution for these things. It's going to take a myriad, a tapestry of solutions, and at the end of the day, what we're looking for is big problems to be solved. And the points that Chuck raises are usually done to satisfy specific pinpoint needs. And more often than not, it's seldom the case that projects are originated in the private sector, but rather instead they're bought out of the public sector and into the private sector down the road some point in time. I would point out examples of highways where they're privatized over time, and that works to some extent, but we need big problems to be solved, and what we really need to do is look at where scale exists. And what I mean by that is where there's economic leverage by virtue of the size and undertaking of the governmental entity or the private entity that's undertaking it. In this instance, we have big problems to solve. We need big scale to solve them.
And certainly, in terms of big problems, as we heard in Owen's report, by some estimates, infrastructure spending to 2025 will fall short by more than $1 trillion. So, Chuck, how did U.S. infrastructure get to this point of disrepair?
Well, that's a great question. The problem that we have right now is that this is all managed by and large in the United States by government, by federal, state, and local government. And we have a system where we do collect some user fees in the form mostly of gas taxes, fuel taxes, which are insufficient to fund all of the infrastructure development and maintenance across the country. And therefore, we have to use borrowing and general revenue, basic regular taxes, to supplement this. And part of the challenge is you have politicians determining priorities, politicians in Washington, D.C., and politicians at the state and local level. What we really need to do is develop a prioritization using objective criteria. And one of the big differences between the plans is that Donald Trump wants to bring the private sector in on this, bring investors, equity investors in. And I think that they will be far more disciplined and far more objective in their approach as to where to put their money to get the best return on investment and ultimately to serve the public.
Now, Todd, as they mentioned, we have roads, bridges, trains, airports, seaports, among other things. So if you're the incoming president and you're trying to prioritize funding, where do you even start?
Well, I would start, first of all, I want to point out that I think the point that Chuck made is interesting, but all he's doing is changing the venue for the political process to unfold. To suggest that corporate interests are more or less political than those who hold office, I think is amusing but not compelling. So with all due respect, I would disagree with that a little bit. I think what we do is we want to start with those things which have the greatest economic impact. Very similarly, I think in the approach that Chuck is advocating, I would just simply focus on the things which have enormous economic impact first and go backwards from there. I think we start with things like airports and seaports and dams and major arteries for roadways and tackle those problems first, and then we get to things after that later. And I think the other thing to note here is that I want to really underscore the importance of technology here. Technology has a good opportunity for allowing us to do a lot of stuff faster and a lot cheaper.
Now, Chuck, I also want to bring you in here. We mentioned some of these areas that are ripe for perhaps investment and innovation. What are some of the standouts for you?
Well, this is a very interesting question because it goes to, I think, two things. Number one, procurement reform. You find a lot of resistance at the federal and state level to something called design-build contracting. This is something that can deliver projects frequently more quickly and for less money. The problem is there's a lot of invested interests that don't like design-build contracting because they'd rather have government civil servants do the design and then bid it out to contractors to build the projects. That's number one. Number two, we're seeing a revolution with things like Uber and autonomous cars that are going to result, I think, in significantly different traffic patterns in the near future, where we can get a lot more out of our existing freeways through less accidents and a greater throughput. But again, frequently, government rules and regulations, statutes often stand in the way of using autonomous vehicles in a more significant manner.
And Todd, just quickly, any standouts for you in terms of what we should be looking at in terms of innovation in this area?
I think the ability to cut things done far more rapidly, everything from smart roads to self-healing asphalts to incredible advances in desalinization. I mean, all of this, and I guess the quick building bridge projects that are going on right now, all those things are going to really speed the time to market to get these things up and running.
It will certainly depend on a very important road, and that'll be the road to the White House. Thank you so much for joining us, gentlemen. Chuck DeVore, Vice President of Policy at the Texas Public Policy Foundation, and Todd Furniss, CEO and Managing Partner at GlendonTodd Capital. Thank you, guys.